As a day trader, these are some of the main best four candlesticks you need to know for you to actually be profitable. The inside bar, let me just pinpoint it to you. The pin bar, doji, engulfing, bearish engulfing in this example, a doji, inside bar, a doji, a pin bar. Good day, guys. How are you doing? I hope you are all good. So I thought let me just quickly share with you some of the best four candles which I actually use in my trading. The best four candles which I also share in my 2025 day trading mastery bootcamp course, and the same four best trading candles which also form like the main part of my trading strategy. So I'm just going to try to get a little bit deeper into them. We're just going to try to go to smaller time frames as well. And we're just going to touch on some of the patterns we look for, especially after we see these candles on a higher time frame. So I'm just going to switch, show you a book. Let's go. So shout out to FTMO for their academy. Let me just clear this. Special shout out to FTMO because FTMO gave us an academy. So if you plug in onto FTMO, I actually dropped the link in the description. You can be able to go through the academy. Let me actually quickly show you before we get into this book. Let's go. Okay. So when you log into FTMO, you see there's this academy right here. If you come to that academy, you just click. Excuse me. Right, you just scroll down, you see where it says study now, then you can just start on the course. After you finish the course, they'll actually give you a certificate for finishing this course. So it starts from the basics, the very basics of trading, goes all the way up to the advanced. And I've noticed they've also dropped a psychology course as well. So this will be something which you can actually go to and you can go through it in your free time. It's simply free and you can take as much time as you want, and it will definitely help you out with your trading journey. That being said, shout out again to FTMO. I actually got this little book from FTMO with these particular chart patterns. So if you notice here, these are just some of the basic patterns we look for. So from the left, let's actually just slide it. You can see we've got the double top, and usually this is just like an example, or rather examples of how these patterns should look like. So when we open the charts, we'll be able to see variations of these patterns. All right, so we've got the double top on the top, we've got the double bottom on the bottom. And what I want to highlight mainly is the four best candles which I mentioned. So it's mainly your doji, your engulfing bar, your pin bar, and your inside bar. Those four particular candles are the ones we use mainly on our strategies. Of course, you can look for them on all time frames, which means any trader can make use of these candles. But if you're day trading, then you can just stick with me, and I'll try to explain and show you how I use these particular candles in my day-to-day trading. So if you notice here, I'm not sure if you guys can actually see. Maybe I should actually zoom it a little bit more. Let's see. Okay, there we go. Right, so excuse me, guys. I got a little bit of a cough, so I might be coughing here and there. All right. So as a day trader, some of the things you need to know is you need to know your previous week high, previous week low. If you open your charts, you also need to know yesterday's low. You also need to know yesterday's high. These are just areas which you need to mark as a day trader. You also need to go through liquidity. So if you want me to go deeper into any of these, please just write in the comments. If you just comment this or comment this or comment this, then I'll know exactly what videos to do to follow up on this one so that everything can become a little bit more clearer. So you should also know about liquidity, your liquidity sweep, and what it means, these four candles, and you should also know your support and resistance. So as a trader, if you know these things, and if you know and understand all the candles which I'm going to show you, everything will become a little bit more clearer. So if you see here, what we have is a double top, as you've seen here, and we also have a liquidity sweep followed by a doji right here. So here we've got an example of a doji. On the bottom, we've got an example of an inside bar. We've got an example of a bearish engulfing. We've got an example of a pin bar. This is just on this particular pattern. Let's see what other candles we have. On the bottom here, we've got a double bottom on this pattern. We've got two pin bars or two dojis, depending with how you understand your candles. These two candles you see right on this low, and they are also on a support zone, right? So again, here we had this high, which is actually a neckline on a pattern like this. So you are looking like for a W, then you are looking for a break, potential retest, and a continuation. So sometimes the retest will just happen on the very next candle after the break like this. You see we've got a nice pin by candle right there. Sometimes price will actually do this. They'll break the neckline, then retest, then continue pushing up. So it is on these points of interest. So these areas like your support and resistance and your neckline area, these are areas which we call points of interest, right? So if any of these four candles I mentioned appear on your point of interest, you should actually know that that area is a high probability area, and your setup will actually have a higher chance of playing out. So how do you mark your support zone? You want to first get price hit a certain level for the first time. Soon as they hit equal lows, you want to mark that level, and that level becomes your support. Then same applies on the top side. If price hits the top side the first time, second time, soon as you get two hits, you want to mark that level, and that level becomes your resistance. Right, just write it in full. That area becomes your resistance. Then if a resistance level is broken and retested, that same level now becomes a support. Right, so I hope this is clear. So price will keep pushing until they hit another resistance at the top here before they actually start pushing back down. So it is on these points of interest whereby we look for an inside bar, inside bar, inside bar. Then from the top side, bearish engulfing, inside bar, bearish engulfing. We had a nice break, and we had an inside bar. So it is on these points of interest where we are actually trying to look for these particular candles. And here we've got an inverted head and shoulder. Usually people know this, a head and shoulder pattern. So it's more or less the same thing. If you see your price create a leg, create a leg. So here you've got a point where price is hit. If price hits this point the same time, you've got equal points. So all you have to do is to mark that area, and it becomes a what? It becomes a support. Same applies to the top side. If we took equal hits to this level, it would have become a resistance area. But in this example, I'm not sure if you had the term a fake out. This is when price fakes out, like they want to break out and push up, but immediately they then come back below. So again, this also shows that at this point in time, the market will be ranging before the trend even continues. So all these are terms which you actually need to understand as a day trader. So if you don't understand any of the terms I've mentioned, please just comment with the term I mentioned, and I'll definitely do a video for all the terms which we mentioned in the comment section. So, and again, remember, on your points of interest, you're looking for the same bars. So we've got a doji here. We've got a nice bullish engulfing here. We've got an inside bar here. We've got an inside bar here, inside bar here. Here we've got a break. So these are all the candlesticks you actually need to know if you want your trading journey to be interesting. So on the bottom, we've got continuation patterns. So if you guys want me to get a little bit deeper into these patterns, just comment with the words continuation patterns. Then I'm going to get a little bit deeper into all these patterns, and it will be followed through with proper live chart examples like we always do in all our lessons. All right, so let's quickly jump back to trading view. So here we've got GBP, JPY. This is on the daily time frame. So this is the other thing. So this is a clean chart, pretty much naked. Personally, I do not take my trades on this higher time frame. This higher time frame for me just helps me to understand what's going on the bigger picture. Then once I understand what's happening on the bigger picture, I now jump to my H1, my M15, M5, and M3 for my entries. So I'm not going to look much into this previous data because it would take us a long time for me to explain the daily H4, H1, M15 on each and every candle. But I'm just going to touch on 1, 2, 3, 4, 5, 6, 7. So I'm just going to touch on these last drop here, or maybe let's just look at the data for Feb. Then I'll try to expand a little bit deeper into these setups which appeared within these few days. So at least here I'll be able to jump to H1 M15 to show you my entries on the smaller time frames and my day trading entries as well. So again, this is a clean chart, but if you know me, you know I prefer my chart with indicators. So we are going to switch to MT5, GBP, JPY on the daily chart. So if you follow me or if you follow my lessons or my videos, you know I use these moving averages. So we've got the 13, we've got the 50, we've got the 200, and we've got the 800 EMA somewhere up there, and we've got the TDI indicator on the bottom. So if I'm trading as a day trader, what I want to understand is my bias for the day. And I can only understand my bias for the day if I'm on the daily chart. That's number one. Number two, I want to see my period separators on the charts. So if you're on the daily and you see these period separators, each period separator represents price action for a month. So this is 1 month. You can see this is January. This is the current month we're in. This is Feb. This was another month. This is December, and this is November. So each time a month opens, for example, we opened here in Feb, I want to see where my price is going. Is my price pushing down? Is my price pushing up? So to help me, it can be a visual thing, a color visual thing, whereby you're just looking at the color of the candlesticks, whether they are expanding up or expanding down. It can also be through market structure, whereby you have to check whether your price is creating from this high. For example, we get a low here, we get a lower high here, lower low here, a lower low here, lower high here, lower low, lower high, lower low, lower high, a little minor low here, lower high, and potentially price might still push to create a lower low is possible, or they might find support here and decide to push up. These are some of the things I just take a look at a glance on my daily time frame so that I can understand where my price is going. And the next thing is I actually need to check where my price is going in relation with the 13 EMA. So each time my price is trading below the 13 EMA, as long as it's in line with my market structure or it's in line with my trend, I'll know that my price is actually bearish. And each time my price is above the 13 EMA, I'll know that at this point in time, my price is bullish. And again, I'm using this same moving averages as a dynamic support and resistance. What I simply mean is if my price is trading towards any moving average, that moving average will be a dynamic resistance point. So instead of a resistance point being fixed, it will actually be dynamic because we are using a moving average. It means it's just moving from place to place, right? So here we've got this high and this high here. So you can the first high, the second high. So that area here is a resistance area, and this moving average here is a dynamic resistance. So each time my price hits here, I anticipate a potential drop unless we break above and we start pushing up, then it will become something else. And if I'm trading towards my moving average, for example, right here, if we get to this moving average, which is the 50 EMA, I'll know this is a dynamic support. So chances are my price can bounce off that moving average and start pushing the other way. So these are just some of the basics I need to know when I'm looking at my chart. So we're just going to look at Feb, like I said. So Feb started the first day, second day. On the third day, we hit the 13 EMA, which is now what? A dynamic resistance point. So soon as we hit the dynamic resistance, we got an inside bar. This is how you trade an inside bar. So the first thing is you get a bullish candle. Then within your bullish candle, there will be a smaller candle inside, which is our inside bar. But for this inside bar to be valid for a sell, what I want to see is this pattern forming on a resistance area. It can be a fixed resistance block, or it can be a dynamic resistance area as well, like a moving average. So in this example, another confluence which we actually had was this order block to our left. And again, if you need a lesson on order blocks, just comment with the word order blocks and I'll be able to do a video for you guys. So here you see we had an inside bar right on the 13 closing back below, which gives me a bias that this downtrend which was happening here has got a higher probability of actually continuing to push up, to push down. So you will look to your left now because now you're trading away from your moving averages. So you need the next low you see has to be your take profit target. You need to understand where next your price is going. So this is now where your liquidity sweeps will come in. So if you're trading towards any low which is standing out, you should just know that's a liquidity area right there, and price will most likely trade towards that area. So soon as this candle closes, you will know that you're starting to look for sells. So on this particular day, this was the 5th of Feb, we were going to be looking for sells. So once I get the picture from my daily time frame, the next thing I want to do is I jump to my 1 hour time frame, and let's just go to the 5th of Feb. This was the 5th of Feb. What am I looking for now? As a day trader, my time frame, which is going to confirm what I've seen on a higher time frame, has to be the H1. So when I come to H1, I'm simply looking for the famous 4 candles which I've mentioned. I either need to get a bearish engulfing, number one, I need to get a doji, I need to get a pin bar, or I need to get an inside bar. And all these 4 candles, not all of them basically, just one of them, they have to appear on or near a point of interest. So a point of interest, like I said, has to be a fixed resistance point if I'm selling, or a 13 EMA moving average, or sometimes a 50 EMA, which is a dynamic resistance point. So when I came to the charts on the 5th, the day would have started moving right here, started with a drop, retraced, gave this first inside bar. Remember, you always want to see any form of a liquidity sweep before you enter the trade. So price retraces back into this area, and they give a nice pin bar or a doji type of candle, followed by another pin bar type of candle, which actually takes out this high, as you can see. So now that the liquidity sweep is complete, now we can enter the trade. So depending with how you understand price, you can enter at the close of this candle, or you can enter this trade on the M15, where you can actually get a better price entry. Okay, let me mute a bit. I think there's some noise outside. All right, guys, thank you for your patience. I'm just like on a certain location where I'm actually very close to a railway track. So there was just, I'm not sure if you can hear the sound now. There was just some trains passing. So sorry for that disturbance there. So right, our price was pushing down. So what you want to wait for is always a liquidity sweep. You always want to see a liquidity sweep form. Then you want to get any of the familiar candlesticks like your doji or your pin bar. Okay, guys, if you can hear this sound, very sorry for that. My apologies. But I think it's a little bit better now. All right, so you want to get your doji or your pin bar. Then soon as you see it forming, for me personally, it's usually New York session. That's my main trading time. So if I see it form at New York, I'm in that trade. If I'm on the charts, maybe sometimes at London, I might take the trade, but I prefer to take my setups at New York. So you can see how I got my entry candle or my entry signal on the daily chart. Then I come to my H1 and I'm looking for the same thing. But then confluences have to line up. I need to get a resistance area if I'm selling or a dynamic resistance here in the form of a 13. Then I need one of the four candles to show. Then I can execute my trade. So this was what? This was the 5th of Feb. Maybe you guys might want us to actually show the entry on the 5th of Feb. Okay, so here on TradingView, you will see my session times. The light blue area is my London session, and the gray area is my New York session. So let's just quickly scroll to the 5th of Feb. Then on the 5th of Feb, you see this setup actually appeared at New York session. This is also a candlestick pattern, which I didn't mention. It's just a bonus candlestick pattern, which is called a tweezer. Some call it a tweezer. Some call it a railroad pattern or an ara candlestick pattern. Just depends with how you understand it. These two candles here. So if you see these two equal candles form at the high of the day or at the top of a trend, so one has to be bullish and one has to be bearish, that will show that your price is actually selling. If they form at the bottom of a trend or at the low of the day and price was coming down, that will just show that your price is reversing. So one will be bearish and one will be bullish. So that's just a bonus candlestick pattern right there. So what you also notice is this red line here is showing us the low of the previous day. So remember, as I mentioned, as a day trader, you need to be familiar with yesterday's low, yesterday's high. It's just areas you need to mark or just get an indicator which can put those zones on your chart. So here we had a nice liquidity sweep above the London highs, and we had a nice candlestick pattern right here. So this right here would be my entry. And we're going to also mention risk to reward ratio. So you put your stop loss outside your range. If you follow me, you will know that I always aim for a 1:3 on most, if not all, of my setups. Sometimes I'll go for a 1:2, but it's usually 1:3. So this would have been a setup, and you can see it was coming from a price signal from one of the four best candles we mentioned on a daily time frame. We come to H1, we look for the same candles. We come to M15, we look for the same candles. So the next day was also bearish. I'm not going to touch on the daily. You guys already saw. Once the daily shows you a direction, just know for the next 2 or 3 days, price will most likely be going in the same direction, especially if your market is trending. So on the next day, you can see price then came. We broke the previous day's low here, as you can see. And pre-London, price gave this nice pin bar here, actually hitting. Let's see if we actually hit this liquidity zone right there. Sorry, this fair value gap here. So if you also don't know about fair value gaps, FVG or an imbalance, so that's an I, imbalance. Also comment FVG or imbalance in the comments. Then I'll actually do a separate video specifically talking about that. So pre-London, you would have noticed, this is for London session traders, you would have noticed that your price has hit a point of interest with one of the four candles we want. So these candles have to appear in a point of interest, like I mentioned. So price then moves, we break structures to our left. Then what happens after we break the previous day's low, which is this red line, we get an inside bar. So as soon as you get that inside bar, you are actually in that trade. So as soon as it closes, sometimes you might have to wait for maybe a break of an order block. For in this example, this was the order block right there. So when you get a break, you can actually enter with a sell stop because already your price is confirmed. Stop loss goes above your entry candle and you aim for your 1:3. This is a London session trade and there you go. So here I didn't show you the H1, but you guys are actually getting the picture. So I'm sure you understand how the price moved here. So coming now into New York session, what did we have? This was the initial New York high. So you want to mark that high like this. Then let's just see how the H1 was looking because mainly my setups have to be confirmed on the H1 first with a 13 EMA retest with a nameable candle or one of the famous four. Then we can come to M15 to get an entry. So quickly jump here. This was the next day. So this was our pre-London entry, like I said. So what do we have here? Near the 13 EMA, we get a nice doji. This is where we're actually talking about on the 6th of Feb. So it's clean. Once your H1 confirms your direction right here, simple, you wait for the same thing. You are waiting for any form of one of the four best candles we are looking for, either a doji, pin bar, bearish engulfing, or inside bar. If you get any of those, you are in that trade. So again, you just have to wait for your doji, of course, to confirm and close on the H1. So I didn't mark exactly where it closed, but here you will notice we got this bearish engulfing, we got this inside bar, and price came back below this initial New York high, bearish engulfing. So you can use either a sell stop or you can just sell at the close of the M15 candle. Then in this example now, you're going to have to aim for the initial low, which New York initially set. That has to be your TP. And also you just have to take into account that this price has been selling for the most part. So instead of aiming for a 1:3, yes, it eventually played out into the next day. But if this was me on this chart, this would have been my target. My trade would have just been like this. So this is how I apply knowledge of these candles into my day trading every day. And mainly if I can get my setup during London session, that will even make it better. So this was just the example coming from this inside bar. One bearish day, the second bearish day, took our liquidity here, took our liquidity here. So each time liquidity is taken, you are looking for a potential reversal. So I don't want to veer much away from these candles. The next candle we saw was this doji here. Right. So I'm just going to touch on sales in line with the buyers for this month. So the first sign that we're going to potentially sell was this doji. But at this point, our price was trading between the 50 and the 13. So we are trading between a resistance and a support, a resistance and a support. So until we break this level, for me, I would rather wait to get the best entry. So the best entry for me would have came just after we close here because now I've got a bearish engulfing candle. Take note that there is this low of this day which is standing out. So once I figure out what's going on, I just mark my chart like this. So that low is of importance, and this day has closed off being bearish. So as soon as this day closes, I think this was Thursday because it's a weekend now, and yesterday was Friday. So Thursday we would have been looking for sales, right? So after that bearish engulfing, I'm just going to come to H1. We're going to look on Thursday. This is Thursday here. So price started by dropping. We came back to our 13 EMA. We came back to our order block. We've got a resistance point, dynamic resistance point in an order block. These are confluences lining up. So as soon as I get that doji, I'm now getting ready for a sell. So I'm not sure what time this was, but let's see if I can be able to see that area on M15. Right, we're looking for Thursday. Okay, we do like this. Right, so When you come to your M15, so that you can see that it's the same area I was talking about, let's just go to H1. From H1, we are going to mark an order block. I'm finishing up, guys. I didn't want this lesson to be too long, but you can see there's a lot of knowledge which we are dropping here. So I hope you don't mind that these videos are long. So you can see this is the order block we're referring to. Then after this doji closes, we're going to put a vertical line here. After this doji closes, this is where we start getting interested into taking a sell. Okay, what's happening with my network now? Okay, sorry about that, guys. Sorry about that. Sorry about that. Okay, I don't know. My trading view just froze. Okay, what did I do? All right, there we go. There we go. All right, so as soon as my H1 doji closes, I'm now looking again on M15 for any familiar candlestick which I can use to enter. So I'm looking for the famous four. I'm looking for a doji, pin bar, bearish engulfing, or inside bar. All right, so from this, okay, let's remove the vertical line so we can see the candles. So you can see that doji we have on H1, you can see how it came above these candles here. That's a liquidity sweep right there. So as soon as you see this, your safer entry would be a break of the order block, of course. So if there's any other candles supporting this pin bar here, you can still use those candles for an earlier entry. You can even go to as low as M5 or M3. If you've watched some of my videos, that's exactly what I do. But if you decide to enter with a sell stop, what's your target? Your target is the next low. This was the initial low of the day. So you just want to mark it into the future. Then your sell would have been a sell stop with my stop loss below the bearish engulfing candle, like this. Then my TP would have been right here. So this is a 1:2.98, almost a 1:3 risk to reward ratio. But if you notice, this is an example of a trade whereby you enter right here, but the trade pushes down, comes back to your entry. First time gives you another bearish engulfing, pushes down, almost hits your TP, but comes back during New York session. Sometimes price will come and take out these highs at New York. So you get another pin bar forming right here. But in this example, we had a bit of an RR candlestick pattern. And again, price actually dropped. This simply means that if someone was coming to the charts at New York session, and if you notice this price action, their entry would have been like this. So they would have the same bias, same target, slightly a lower entry and slightly a lesser reward. But again, the setup would simply have played out. Then coming into Friday to close off the week, I'm just going to slide to H1 here so that we can see what we have. So here you see this was the low of this day. This was Wednesday. So that same low, right? So now we've got a resistance zone. What else do you guys see? Double top. What else do you guys see? A pin bar. What else do you guys see? The previous day's high, which was this high here, interlocking with this day's low. So we've got a nice resistance zone here. So once you get a nice zone, the next thing you want to locate is one of the famous four. Either you are getting a pin bar, either you're getting a doji, either you're getting a bearish engulfing, either you're getting an inside bar. If you get one of these four candles in a point of interest, especially with a pattern like this, followed by a sell candle, you can simply wait for a confirmation here. You can even enter at the close of this candle. This is H1, and you would still have made your pips. Stop loss above that's H1 or even outside the range, aiming for either a 1:3 or just aiming for the previous day's low here. That setup still would have just played out. So I hope this lesson was making sense. I'll try to drop a video right here on this corner for the Candlestick Trading Bible so that you guys can understand more about the candles as well. If you haven't gone through the Candlestick Trading Bible, the video which is going to appear right here, that's yours. You can just click, then you can go through the Candlestick Trading Bible so that you can understand these candles in greater detail. So don't forget to comment with any of the words which I mentioned and you want me to do a video in greater depth about them. Just comment with that word or words then I'll definitely look into it. Then if you still want to go through the Candlestick Trading Bible, this video appearing right on this corner is for you. If you watched until the end, thank you so much for joining. Enjoy the rest of your day. Good trading.